Good afternoon, Scott Radler, T3 Live. This is take 3 on the recap. We're having some technical difficulties. This will be the last one. Otherwise, I'm heading after happy hour, and that's that. Anyway, we came in today, and we really didn't know what to expect. We thought potentially there could be some downside follow-through to yesterday's outside reversal. Yesterday was one of those days to take notice, a day to clean up some excess positions and kind of switch gears and be on alert just to see if we get some kind of composure change. But you know what? Nothing changed. We came in today, the banks were strong, some select tech stocks, were also on the move. You had the casino stocks having continuation. You had a little bit bounce, in the commodities, and it was almost back to the regular trend because the trend yesterday never changed. We never closed below the 10-day moving average. We didn't have a decisive break of even the accelerated uptrend. So it was just one of those days to take notice and then reshift gears. And that's what traders had to do today. So if you look here on the SPX, you will see that here you are. Okay, let me get this out of the way. Here is the gradual uptrend that we've been following. Okay, here is the accelerated uptrend. I keep talking about them every day because patterns repeat themselves, and I want you to follow this. Here is a 10-day moving average. See this little line in here? This little line right in here could have made your entire year. Buying every single time that we get there could have made you a lot of money. Or just sticking with your positions as we hold it could have made you a lot of money. So little things, little types of composures or little type of techniques, change with the market, but this is what's been working throughout the course of this entire accelerated uptrend. Now yesterday at the recap, I was talking about this outside day, right? I said, look at this outside day. We pushed through the previous high, came back below it. We had a 3-day down move. Maybe we get a similar pattern. You know what? That didn't happen here. We pushed through the previous day's high. Today, we opened up and we never gave way. So this bar has been negated, and now we're just still in the same trend, and we're still just picking stocks. We're in a stock picker's market. I talked about this so many different times, and then obviously everyone in the media started talking about it. And a lot of people are still negative. A lot of people are still pessimistic, and I don't understand why. You have stocks that you could actually have done your research on that have made historic highs, some of them today, that as an investor, you could have made a lot of money. You also have momentum trades. You have 1 to 3 day strategies working out where you see a price point, you could buy it, you could hold it for a few days, trail it, and make money. Then you're also getting some intraday moves for cash flow if you don't even take overnights, and you could make money. But you're not going to do any of these things if you don't put the time, the effort, and the patience in. So many different times we've talked about Lulu. I know I don't own it right now. I held it for a few weeks, but look at something like this. Lulu right here, there you go. It finally broke out, it finally extended. Look at look what happened here. This is when it gapped up. I always talk about if we can gap up and go sideways and not fill this gap, that shows you bullish power to the upside. And then finally it extended here. If you look at the overall chart here, if you are a macro investor in Lululemon, look at you. You made a lot of money. You don't have to be a machine. You don't have to be a professional trader, but you've made a lot of money sticking with that. Okay, and as a trader, if you saw the extension today, you could have made some nice cash flow. As a swing trader, when we held this gap, if you bought right here, this was the day that I got involved also, you could have entered and you still could have made a lot of money, not even owning it, into earnings. You could have earned it, you could have had it after earnings. So anyway, congratulations if you're in there. Under Armour also, congratulations. Another new high, another historic high or 52-week high, whatever high you want to call it. If you invested in Under Armour as an investor and did your homework, look at you. You're doing really well. As a trader, if you played it for a breakout, and you traded it for the 52-week high trade, when it broke above this 87, you made some cash flow. Good for you. Now let's switch gears. Let's talk about the casinos. You know that I've been talking about LVS for almost 2 years. I've been waiting for it to break above this channel that it's been in for months already. And then finally on earnings, it broke above 50.40. Recently this week, we saw the flag at 54. I'm a buyer above 54 for momentum. You look at the chart of LVS, you'll see nice move, okay? A few different patterns here. This is when it broke this downtrend, right? This little wedge, that was one entry. Then you had another entry after earnings. You don't have to hold through earnings right there. And even if this noisy mess, you didn't want to be in it, look how clean the move was once it broke above this 54. And obviously after 3 up days like this, you sell into some strength, but you hold some because you look at the monthly chart here, unbelievable. The reason why I loved it so much is because I said, look at this sideways action. after a big move from those 2008 lows, it didn't even pull back. If you want to do like the fib retracements real quickly here, you'll see that, you go from the low here all the way to what was the high of this move. And it didn't even pull back, more than the 3.8, whatever that is. I can't even read it in there, but the 0.382% retracement. So that's impressive. Okay, so anyway, nice move there. Different type of trade. If you look at it here, this has been a really good investment also if you timed it a few different times with us. And then, Jim went over WIN. WIN has been something that has been disappointing for the past 6 to 8 months. But it showed you that it was ready for a decline with those 2 outside days and that downtrend. But recently, after they got rid of that shareholder lawsuit, recently when they took back the stock and they got rid of the overhang, one man's trash becomes another one's treasure, and it became a great trading opportunity. So, as a different strategy, you saw that I haven't been trading WIN. I know Sperling's been trying, and it hasn't really been ready for the past 2 weeks. I just started trading it yesterday, okay, at 116, 117 or somewhere around there. And then obviously the market was weak, but it showed relative strength. And then today was another trigger above 121. So if you look here at WIN, there you go. Okay, nice little pattern here, like nice 2-day trade. This was one pattern that we were isolating, that the way I was saying descending channels break to the upside. And then if you look at the bigger pattern here, this is when it broke above the 120. And now, it has room to probably, this area, which is what we went over a few days back. So nice 2-day move if you're a cash flow trader. Nice timing mechanism if, even you're an investor and you got out on this outside day, or you got out when it retested it and did this 2-day harsh move. And now, who knows, maybe the trend changed and you have a great entry if you're a swing trader. Hold it, trail it if you're looking for moves. I did sell some today, but I'm holding some. I think it can continue higher. But that's how you time it. So I just showed you like 4 or 5 different things working with all different types of strategies, and you just have to figure out which one you want to do and which one you're good at. Now, we all change and we all evolve, and everyone who knows on my site, a lot of people watch this with our affiliates on Twitter, wherever you're at, on Real Money. But at T3 Live, on the virtual trading floor, people know me very well. Okay, I'm on the radio most of the day. Everyone knows my little quirks. I try and make people laugh. I laugh at myself. And there are a lot of times when I'm a little early to a move, and I'll lose money and I'll get frustrated and I won't go back to it. And I'll say, that stock got me. And one of my New Year's resolutions was, I'm going to stay with the trade, and even though if it's not working yet and I lose money, it doesn't mean the stock's bad or it knows I'm trying to do it. It just means it wasn't ready yet and I was early. And I'm sure you guys could all think to yourself, what stock has Red Dog been eyeing? Goldman Sachs. It's got me. I've lost money 3 different times every time it failed to get through that 118 and hold it. My levels were 117.5, 118.5, like 3-4 different times lost money, where the old Red Dog a few years back would have said, I am never trading Goldman Sachs again. That stock got me. It knows me. They're watching me. All traders have those stupid things that go on in their head. But you know what? I'm trying to change. I traded it with a little less size today, but I'm like, you know what? It was upgraded. It's showing real strength. It got above 118. This time it's actually holding. I'm going to forget that I lost money there the last few days and it didn't work because it wasn't ready. And I'm going to go with it because maybe today's the day. And if you look here at Goldman Sachs, you'll see today was the day. Here I tried it, didn't work, got out. Here I tried it, didn't work, got out. You look what happened today. It closed on the dead highs, closed at 121.13. It finally went through this nice consolidation, this big resistance, nice cash flow trade. We talked about it when Alex was working with me with the morning call. This was your core entry when it went up on earnings. And since then, it's been consolidating, going sideways, holding its 21-day. And today, finally, you had your breakout. And now, in my opinion, it probably at some point could get up to here this year. Okay, at least 130-ish. And who knows, tomorrow it could be 123 to 125. So I'm going to try and stay with some. Morgan Stanley, I entered a little bit today. It's definitely a laggard. Someone downgraded a few days ago about some kind of concerns in their SDSs, but maybe it's not the case. I'm going to bought it today around 19. I'm going to, I'll have my stop right in here, and maybe you play some catch up. But another different type of strategy. And then if you follow me on the virtual trade floor, you'll know that I've been long JP Morgan probably for a week. I've been long it. That's the bank that I've been trying to ride ever since the December 20th gap and go. And there's been times to be in it heavy and times to be in it light. I did sell some yesterday. I'm holding some. And at this point, you probably could take a little bit off, but it could continue. This was a very good target when it broke this little wedge type pattern right here. Okay, and then this sloppy mess, which is what it was as it consolidated the big move off the lows, finally started to, it started to trade above it and extend. So this was that wide range bar. That's when I think I re-entered more. Okay, this is when Warren Buffett said he's putting in his PA. You had about 20 minutes to buy it when it was down 30 cents, closed strong, and now it's up above 40. Next level looks like it's coming around, I would say 41, 42. Take some trades along the way, but stay with this one and buy dips, and I think it goes higher. Bank of America, some guys are just holding it. It's in the drawer. It hasn't done anything yet, but if we stay strong, this too could have another move. My target on this one this year was like 8, and I obviously got there a lot quicker. Now I do think there's some room probably to about 950. But obviously don't trade it as heavy if you were in way back here, but nice sideways action, nice continuation. You probably get another move here. So if you're holding Bank of America, it's slow, it's steady, and stay with it. And you could, if you have risk averse, put a stop in around 780 because that's what held. That's what we talked about. Anyway, so with that said, every pattern I'm showing you is somewhat different. So if you learn how to trade them and you go where you feel most comfortable, you could trade them as well, and you could get some conviction to get some size and to hold them. As far as that rumor about oil that came out about the Saudi pipeline, there was like a fast trade there too. It pushed through, the USOs pushed through that high, and it actually, what really happened here, if you remember from off the charts, is it had a big move, big breakout, retested, and now it looks like it can continue higher. But finally, it actually affected the market a little bit. When oil started to really get going, you saw the market come down, so we need to make sure that that correlation comes into tact, where typically, or for the last, I would say, year or two, oil up, market up. But then when it gets severe and people start getting a little scared, like maybe oil above 115 or new highs, then maybe people sell the market a bit. So you saw it today. Oil did spike above 110, market came in, and then once that rumor was disputed and oil came down, market popped. So they could start to trade a little bit inverse if the oil starts getting a little bit more extreme. As far as gold, gapped up, I said 167.5, 168.5 could be some resistance, and it proved to be for now. Little inside day here, not much action. If you went home short, you had a lot. You didn't have a lot to deal with, but I think that you should have just taken your move yesterday, considering the size of this move. And I do think that if the sellers have any control, they don't let it really get above this area. If all of a sudden we get above this area and it churns, and this was a little bit overdone, maybe there was other contributing factors besides people just saying that no QE3, etc. But at this point, new little range, see what it does here. People are like, oh, would you go home short or long gold? I just think it's a tough call. So why do the tough call? Why play the hand that is difficult to trade? You don't have to be in something that it's hard, because you did have a harsh move lower, which indicates that we could move down more. But if all of a sudden this was more than it was whatever the algos and the fat finger, this and that, it could bounce a little bit more. So I just think there's easier things out there. So if you're in it, that's fine. Just have your risk defined, and we'll measure it as we continue. OAH has had a nice bounce back today. I think guys were talking about some of these ags, and if you look here at a CF, after it failed to go through the highs, it pulled back a little bit and still holding in there, held the moving averages. So a lot of these stocks are still consolidating, still taking some of these down moves in stride. Obviously, Apple is, didn't have a blockbuster move today. There was some two-way action, but still on the move, still, psychologically controlling the market. And for right now, it's still trending, so don't fight it. Yes, did we catch a few cute shorts today? But you could have made money just as easily long it. So just know what you're looking to get out of this Apple, because it's really fast, and I know I shorted it and went down $3 and it felt like I just stole something because I was short Apple and made money. But really the trade has been just keep buying those dips, and if you're an investor, stay there. And if you can't handle the speed of Apple right now, just take a step back, and there's other things that are a little slower, a little bit more methodical. Another stock that has me frustrated, but I'm going to try and do my Goldman Sachs type of scenario where it just might not be ready yet, is IBM. IBM broke out. We had a really nice trade last week, if you remember, right above this 195. Happened pretty fast, pretty furious, and it's been very choppy here. But look at the move that it's had. So rightly so, it's consolidating. I bought it a few times to break out above this 199, and it came in, and I lost money. And I right now, I tell you the truth, I hate IBM right now. But I'm trying to change and grow and say, you know what? I shouldn't hate IBM. It was a great trade. It took time to get through that area. Now it's consolidating again. It might just need some time until it's ready. So instead of saying IBM is horrendous trading stock, it's really not. It's just not ready to break above the level I want it to. So when it finally really shows those signs, like you saw today in Goldman Sachs, when you saw volume, you saw relative strength, same way we saw with this one when it broke out, a week or so ago, then go after it. We're just trying to trade a breakout that the institutions aren't ready to take yet. So don't let that skew your judgment on what's going to happen with IBM. As far as Zynga was a nice little gift today. I've been watching it finally. It got a little frisky. It traded above one of the pivots that I've been watching. I was kind of watching it right here. I discounted this day, closed really strong, closed at highs. A lot of analysts that I talk to that really love this think we could be seeing above 20, pretty soon, or at least before Facebook comes out. If you want to, take a look at the volume that came in today, let's just put the volume in so you can see how heavy it was. There you go. Actually, really not that heavy, but decent. I think 20% of this float is short, and I'm sure they have a lot of thoughts in their head of what they have to do, considering this stock has no memories above it, right? Is there anything above this stock? No. Does it have huge potential with Facebook and other social gaming sites? And I talked about it with the guys on the desk, and it was pretty funny. My wife, all she does is play that Scrabble game with all of her friends. Everyone is doing it on the subway. They're doing it everywhere. And, it could really be the next best. I don't want to get into that whole spiel, but it's almost like the Warren Buffett thing. If you see a lot of people doing something, they love it, chances are, they're going to be able to make some money from it, and it's a good situation. So anyway, let's see what happens with Zynga. I'm along that. I entered it today. As far as Dunkin' Donuts, I do think you put this one in the draw, and you could see higher prices as a trade. One of these days it'll break above this 30, and I think you can make some cash flow. As an investment, I think you put it in your IRA or something, and you turn around in a year or so from now, and there's no reason why it shouldn't be through the IPO high and can't be a $40 to $50 number, considering it's only 9 months old and they have an expanding business all throughout the world. And I love their iced coffee myself, and those little flatbreads are not so bad either. So anyway, moral of the story is the market has something for everyone. Whether you're an investor and you're holding something you did your homework on and it's made a historic high and you held it, whether you're looking for 1 to 3 day moves like we saw in some of the casinos, whether you're trying to play a breakout for cash flow like we saw today with Goldman, you could do a lot of different things. Even this morning, Amazon was a decent cute trade where it was weak yesterday, traded through 179. And I shorted some at 179, went down below 177. I covered a decent amount considering it was just a $3, $4 trade because I have the options just in case it really works. You look here at Amazon, you'll see. I do think that this pattern to me is definitely more bearish than bullish. It's going to really have to trade below this support line and close below it with some volume before it really triggers. But you have this trend here. It is wedging. It is in the lower end. The market's near the highs. This is like not even thinking about it. So this is one of my shorts that I think could crack. It's just a matter of when. So I took some trades today. I'm still short some. I still have the puts. And if it starts to get below this area, it could be real juicy because you look at the monthly chart on Amazon and there's a long way to go down. Okay, and the valuation is high, and there are some people coming out there, some bears even that, I think the guy yesterday on TV said it could be 50% lower. 50% lower is a lot lower. I'm only looking for a technical trade, and we shall see if it takes place. So with all that said, somebody was asking about Netflix. This is another interesting example of know your time frame, okay? Because you go to the daily chart of Netflix, okay, where you had this break of this downtrend, if you remember, with volume gave us a nice trade. This was when we were on Bloomberg and I said it can go to 120. Well, it went to 130 and it was trading very well. And then what happened? You had a little outside day. Remember that outside day? We talked about it at 130 right here. Outside day, depending on your time frame, depending on how you trade it, you could have shorted it when it came back below this 130.60 and just trailed it and stayed with it. And if you did so, you've made about 18 points with no pain. If you don't want to stay in something so long, you could have got out of it. And then remember when it broke this area? Look at the size of this bar. Look at this wide range bar, engulfed this entire area. You could have went out short and it went to as low as 108. Another 10 points if you wanted just a 2-day trade. And now it's interesting. It still held some of the gap. I'm going to watch it, and perhaps if it wants to pop back up, you know, there's a little pivot here around 114.87. We'll see if there's a trade there or if it breaks below. But you know, if you want to frame this, there's another nice little channel here, and the question is, can it squeeze again, or will it head lower at this point? I'm flat it. I'll watch it, and I'll see if some kind of volume comes in. But as of now, this topping tail has controlled it the same way this igniting bar controlled it that way. So with all that said, just the key is to know your time frame. I think the key is just to be positive. Okay, you don't have to be crazy perma bull, but be positive. Look at things objectively. Watch the patterns. Watch the price action. Keep learning. If you don't, if you're just watching this from Twitter or somewhere, check out T3 Live. Check out the site. We have a virtual trade for you. You can see the positions live that I'm talking about when I put them on, when I take them off. I'm on the radio from 9:30 to 11, and sometimes in the afternoon. You have about 8 or 9 other guys. You can see their positions. So there's a lot of things out there that could help guide you through the market. And I know, at the street, with Stephanie and Jim and Jill and all the co-hosts, there's a lot of smart people that are all trying to put actionable, real-time information so you can manage the market more effectively and make money versus, saying, I'm never going to look at the stock market again. I lost money 2 years ago. Big deal. That was 2 years ago. Maybe you weren't looking as close, and maybe you had a broker just pulling the strings for you. At this point, a lot of good things going on. Again, I was quoted saying S&P 1,700 by 2015. I do think that's realistic, and if that's the case, there's going to be a lot of money out there, a lot of trades between now and then. So get with it, start learning, and just, again, be just aware that having, what's the word? I would say just approach the market with a plan and don't have opinions. And if you do so, you'll be able to make money. It's Thursday. Go have some fun. Tomorrow morning is the relaxed morning call. It's around 9 o'clock. See you then. Have a good night.